Hey soldiers, Zimbabwe has an inflation reduction strategy that centers around gold. Also, China's making a big move with regard to gold. What's going on? I want you to also understand that uranium, demand for that is skyrocketing. Why do we need to know this? Because commodities are an asset class. You need to know about what's going on with these asset classes. So, it is a Friday. I have on the gold polo. Let's talk about it. Declaring its July launch of 1-ounce gold coins a success, Zimbabwe's central bank says it will begin issuing and selling coins in smaller gold denominations this fall. Now, Zimbabwe, what they're going to do is they're going to sell a 1/10 ounce, they're going to sell a 1/4 ounce, and a 1/2 ounce coin, a gold coin, in addition to its 1-ounce coin. Now, we all know that 1 ounce of gold is trading somewhere in the neighborhood of $1,800, but Zimbabwe is going to make that more affordable by issuing these 1-ounce coin, fractional ounce coins. Now, the U.S. Mint does the same thing. They issue the Gold Eagle in 1/10 ounce, 1/4 ounce, and 1/2 ounce denominations, as well as the ounce. Following the successful launch of the gold coins July 25th of 2022, and in response to public demand, the bank shall introduce and release into the market coins in units of 1/10, 1/4, 1/2, and 1 ounce for sale with effect from mid-November 2022. That was a quote from the Reserve Bank of Zimbabwe's Governor John Mangudya. I apologize if I butchered his name. If anybody knows how to say that, put in the comments phonetically. Help me out. But he said that this week. The coins, which can be purchased from approved banks in Zimbabwe, were introduced to combat rapid inflation driven by locals exchanging Zimbabwean dollars for U.S. dollars. The Zimbabwe currency is so bad off that they are willing to trade U.S. dollars. Now, in all fairness, the U.S. dollar is the strongest currency out there with regard to maintaining its value. It's the most stable, okay? And that's saying a lot. That's saying a lot about the efficacy of the other currencies if the dollar is the prettiest date at the prom, okay, right now. So, in July, Zimbabwe's price inflation rate was over 250%. Makes our 17%, yeah, that's real inflation, not that 8.5 that is the headline number. Makes our rate seem tame by comparison here in America and even in the UK. They're coming nowhere near 250% in all fairness. The coins have liquid asset status, according to Zimbabwe's central bank. That is, they're capable of being easily converted to cash and are tradable locally and internationally as well. They can also be used for transactional purposes. So, of course, you wouldn't use a gold coin to purchase groceries unless you were purchasing a hell of a lot of groceries. But that's an important piece. Let me not gloss over that. They're saying that these coins do have a transactional value. So that means they are able to be used in the marketplace. The government of Zimbabwe has accepted them like that. Now, in the United States, the gold coins are legal tender. However, you'd be crazy to spend one for its face value because the actual value far outweighs face value of the coin. But you'd have to find someone who is willing to accept that. And I bet you a lot of people who have a brain in their head these days would be willing to do just that for certain purposes. Mangudya went on to say, "We are now providing that store of value to ensure that people do not run to the parallel market in search for foreign currencies to store value. And there is no better product that can be used to store value other than gold." They get it. We know what you have been going through in terms of the fear factor of losing value, and therefore we are providing this gold coin. Their government sounds a lot more magnanimous and in touch with the people than the one here in America. And one of the reasons for that is because, look, let's just be honest. Let's just be real. As a developing nation, Zimbabwe is more susceptible to revolution. And revolutions in certain parts of the world are not peaceful, okay, oftentimes. In fact, they're very brutal. So the finance minister, the Federal Reserve Bank of Zimbabwe, is much more sensitive, especially after the ouster of their former president, Mugabe. That didn't get ugly, but it wasn't a smooth transition, okay? So far in Zimbabwe, banks have sold 4,475 ounces of the coins, so ounces of gold. The state-affiliated Herald newspaper reports with 90% having been purchased with local currency, and that's what they want. They want you to, maintain your value in this Zimbabwean fiat currency. Hopefully one day the situation will get better. We don't know. Fiat currencies usually, they don't recover from swings like that, but Zimbabwe is ahead of the curve on the issue, especially far in front of a country like Canada. Canada is experiencing inflation as well, but do you know Canada got rid of most of its gold? They own like 7,000 ounces, I heard, or it might be even 700. It's a small amount. Let's swing on over here to China. Now, China, their Swiss gold imports soared nearly 150% in July as gold trades below 1,800. So what is China doing? The Chinese people are stacking up on gold. Gold in the East, there's a much closer relationship between the people, even the governments, and gold in the East than there is in the West. And part of the reason for that, I believe, is because the dollar has been so strong for so long, okay? We have not experienced fluctuations in our currency such that Zimbabwe has seen, okay, with that inflation rate, which is, again, tame by what they've seen in the past. So we're more akin to the dollar. But the Chinese people and the Chinese government, they adore gold. China stepped up its gold imports from Switzerland in July, purchasing the most bullion in more than 5 years, according to Swiss Federal Customs Administration. Demand from China is starting to pick up over the summer months, with Switzerland shipping 80.1 tons of gold to China, worth $4.6 billion. This is a monthly increase of 146% and the biggest cargo since December 2016, Swiss customs data showed on Thursday. Increased demand from China comes as gold continues to trade below the 1,800 an ounce level, disappointing many gold bulls that provide gold bulls, but providing a cheaper entry point for long-term investors. Look, the Chinese people, governments, we did a video last week where we saw that the central banks had all purchased gold. None of them had sold gold in the month of July. Now, they're all getting in because I think a lot of people, individuals, policymakers, feel that we are seeing gold at a level that's very inexpensive compared to what it might get to at some point in the future. I'm going to mention this. Now, the United States of America, Jerome Powell is struggling with the idea of raising interest rates, how much to raise them by. But keep in mind that when those interest rates go up, that doesn't only increase mortgage rates, doesn't only increase credit card rates, it increases the rate of interest that the United States actually has to pay on its national debt. In late May, the Congressional Budget Office projected that annual net interest cost would total $399 billion in 2022 and nearly triple over the coming decade, soaring from $442 billion to $1.1 trillion. And that's just the interest we're talking about here. And summing to $8.1 trillion over the period concluding in 2050, I believe. By that time, though, it would have all been imploded long before then. So we don't have to worry. Something's got to give. 2052 to be exact. So that's what we're dealing with here. Jerome Powell can raise those rates, but on the flip side of things, we are the ones that are, in the lurch, because that's going to be another reason to raise taxes to pay off this debt or to pay down this debt or to prevent it from getting to the point where the interest is just so unmanageable that not even the United States can reasonably, we're really past that point right now already. But for appearance sake, I guess, they might think twice about letting that balloon to that point. Your share of the national debt right now is $244,000 and rising fast, as you can see. Now, we are between a rock and a hard place. Jerome Powell is especially, but we are too, because that cost per taxpayer is certainly going to increase as the interest rates rise. And remember, we're also spending more money. One more thing I want to drop on you about gold is the fact that it is considered a strong hedge against inflation. We've talked about that in videos previously. So with the situation that we're in, this whole thing where I've just explained to you how the Fed is kind of caught in a catch-22. If they raise the interest rates, they risk making the service of our debt unmanageable, or punting it over to us taxpayer and having us pay more taxes, or they risk having inflation just go wild. So they are really in a pickle. Now, here's the thing. One of the characteristics of gold is that as inflation remains high, then gold tends to do better. Okay. Now, you've seen gold drop because the Fed has been engaged in monetary tightening. They are raising the interest rates. They've made no mistake about it. They've done two pretty substantial increases, and I think they're going to do more. So that is why the gold price right now is kind of low compared to what it has been in the last couple of years. And that is why these central banks and countries and, individuals in the know are looking at gold mining stocks. They're looking at different ways to get in on it. Okay. So just understand the relationship between gold and inflation. Understand that very deeply, because as inflation starts to rear its ugly head, you'll see gold starting to do a little better. That's traditionally been the case. Gold is a boring investment. It's just meant to maintain your value. It's not the value of your purchasing power. It's not meant to, be the next Tesla. Okay. Understand how it works. Let's jump over to uranium. Now, you might be asking yourself, why are you talking about uranium? Because you can actually invest in uranium. And it's looking like these energy policies that are out there right now may have people questioning whether or not they're going to turn away from nuclear power. I know that Germany is flip-flopping as to whether or not it's going to maintain operation of its last 3 nuclear power plants, or let their people freeze to death. Who knows what they will ultimately decide. Bank of America appears to be bullish on the future of uranium spot prices. The rising support for nuclear energy and tight supply could see uranium spot prices return to $70 per pound by 2023. This is according to, of course, Bank of America. In a recent article in the market index, they said Bank of America forecast uranium spot prices to rise to $70 per pound. Increased uranium purchases from the financial market participants often correlates with higher prices, of course. But here's the heart of the matter. Loss of Russian supplies and Diablo Canyon nuclear plant extension could be bullish catalysts. So supply is being constrained. So again, we don't tell you what to invest in here, but you do need to know that these commodities are real, tangible things that make the world work. Even gold has industrial uses. Silver, I believe, has a lot more. But gold, in addition to its characteristic as a store of value, definitely has some industrial uses. So, okay, that is all for today's boring commodities video. I know these videos are not popular. That's why we put them on a Friday. But these videos are hardcore. Soldiers of finance are watching because they know that commodities are an asset class. Okay, check out this video. David Solomon, CEO of Goldman Sachs, and Jamie Dimon, CEO of JP Morgan. They see some serious potential headwinds in our economy coming up soon. You need to know what they're thinking. You need to know how to navigate this. So go ahead and check out this video. And guys, I will talk to you soon.